So you found yourself trading on all the different time frames. You found yourself trading on the 5 minutes. You found yourself trading on the 30 minutes. You found yourself trying all the different time frames available so that you can day trade and you become a profitable trader in the stock market or trading Forex or trading commodities, something to that effect. But I'm going to take you today and I'm going to show you why the 4-hour time frame is going to make a difference to your trading, why it's going to turn you into a profitable trader. You know, when I started trading 30 years ago, we only traded without computers. We didn't have 5-minute time frames. We literally traded on a day-to-day basis. I would go and buy the newspaper in the evening and go and see what the trades were for the day and where we were going to end up in the market the next day, and then phone the broker in the morning and ask him to make the trade for me. It was as simple as that. So the whole point of trading in the market is to be a success, is to have a strategy that's going to make you money in the market. And today I'm going to show you on the charts why it's not just the squiggly lines that make you money, that it's also in the mind, in the psychology. But we're going to get to that after we've looked at the charts. First, we're going to go and check the charts out. First, we're going to go and see how you can make that money, how you can get the strategy right with the 4-hour time frame, and then we'll talk about the psychology in the market and how you can become a profitable trader rather than a losing trader, rather than a struggling trader. I hope you come and watch me on the live shows as well so we can check out how and when to trade and that type of thing. So let's get to the charts, guys. Let's go and have a look. But before we go, don't forget, trading is risky. 80% of traders, actually 70 to 80% of traders do lose money. So if you don't like risk and you don't like losing money, don't trade. Don't get involved in this game. It's not for you. It's for someone else. Okay, let's go and check the charts out, guys. So many people don't understand why we trade on the 4-hour charts. What's the psychology behind it? Why aren't we trading on the 5-minute charts? But if you look at a 4-hour chart and you look at a trade like this gold trade, for example, you can place your stop loss, you can place your take profit, and you can trade out of this demand area and you can walk away and you don't have to sit and watch this chart. If you want to take a sniper entry, you can drop to the 1 hour and you can go and get your entry there. The neck guy, this one we're taking a loss on, but it doesn't matter because the stop loss is up there, the take profit's down there. You walk away, you come back when this plays out. Whereas on the 5-minute chart, you're just taking these small little runs all in between, stressing yourself out and going completely nuts. I mean, you can trade on a 5-minute chart, but I mean, effectively, you are sitting and you are taking trades based on levels that don't even make sense. Okay, so 5-minute chart, you're basically taking a trade between 82.59 and 82.66. No, sorry, 82.57 and 82.65. That is such a small trade, and it's going to move so fast. You don't know which way this is going to go. You can't call which way this market's going to go. This might as well be a one-arm bandit. Now, I've traded with 5-minute charts, believe me, and 99% of traders lose money on the 5-minute charts. Now, why do we trade on the 4-hour? These levels come from the daily levels. What we do is we go to the day, and the day chart gives us the levels. We normally take them off the line chart because we get them off the closing prices. Then we use the candles so we can see the basic movements in the market. But at the end of the day, we get our levels, our reliable levels from the day chart, and then we just take trades on the 4-hour chart. The 4-hour chart gives us the level that we want to take the trade on, and that's as basic as it gets. Now, if you look at this euro US dollar, we look at this from a daily perspective. We take the day. On the day chart, you can clearly see that it's in an upward trend. The structure's there. It's in the structure. This is not a short trade because it's in the market structure. Up, down, up, down, up, down, up. If it breaks the structure, breaks downwards, then it will go short down to that demand level. But as it stands at the moment, on the support and resistance from the daily levels and the demand levels, you are looking at a situation, it's not going to get down to here because it's in the structure and it's running along the trend. So now you've got a reliable bit of information in your head. You know that this could go long and you could get all this level 111.20 to 1 14 if you wanted to. It's a huge level to get up to. On the 5 minute, you're only going to trade within this candle. Now you take it back to the 4 hours, you look at it, and you've got a completely different picture. You see this? On the 4 hour, you might be thinking, ooh, I need to go short because this is going down and it's broken through this demand level and it looks like it's going short. But I've got information from the day chart that says, wait, don't get excited. Wait for the trade to come to you. This could still turn around and go long. So on a trade like this, because the day level is telling me to go long, what I will do, I'll wait for this to come back and retest. Then I'll look at a short. Otherwise, it's going back into the trend and it's going to carry on its long trajectory. So be very careful of jumping in here and going short on the lower time frames. And if I take this to a 5 minute time frame, which you guys love to trade on because it keeps your mind occupied, there you go. There's your 5 minute time frame. There's your level. It's a demand level from the 4 hour chart. Really short. You take this short, you're going to get those wins there. That's about it. It is short on the 5 minute time frame, but on the day time frame, it's kind of long and bullish. So it's working against it. We trade on the 4 hour charts because it takes the stress out of it, takes the gray hairs out of it. You can relax, you can go and do your thing. You're not stuck looking at the charts and you can enjoy yourself. You can take the trade, put the levels in and walk away. Like I said, on a trade like this or even on a trade like this, you can put the trade in, say, I'll come back and I'll have a look at it later and I'll decide whether I want to move my stop loss up, whether I want to take profit, whatever the situation. Totally relaxed scenario. Whatever system you're using, if you're working on the higher time frame, it'll be more relaxed. Don't think because you're working on the higher time frame that you're never going to make a profit, simply because it's so slow. If you're patient, making money is boring. It's like someone said to me, oh, you make the same videos every day. Yeah, the thing about making money is you got to be consistent. You've got to do the same thing over and over again, and you've got to trade with the same system. So I can't show you a different way to trade every time. I can't show you a different kind of video every time. I got to show you the same consistent way that we make money with the trading. And at the end of the day, making the money is actually quite boring. Making the money is the boring part and the tiresome part. The fun part about the money is being able to spend it. That's where the fun part of the money comes in. The stressful part of the money is if you overcapitalize on your trades, you overtrade and you start losing large sums of money. That can become quite stressful and it can hurt you. So be careful of that. Always manage your risk, always manage your loss. In this case, you manage your loss, stop loss below the trend support because you know that it could come back to the support and go, but we're hoping that it'll turn off this demand level and carry on northwards and make us the money that we require. But if it comes below the trend support, then we know we've got a safety net in place to protect us from any major losses. And if it goes north, hopefully it'll go all the way to the targets. And that's as simple as trading on the 4 hour charts gets. You know, you don't need to be a rocket scientist to do this, but it takes time to get around it with the psychology of it. The psychology of it is you're going to make larger amounts of money on every single trade than you would on a 5 minute, unless you're trading massive amounts. And then also it takes longer to make the money, but it's more peaceful. You will make the money and you can relax a little bit. How much are you prepared to risk on a 5 minute chart? That's the question. Are you prepared to risk $1,000 on a 5 minute chart? Are you prepared to take that risk? Throw $1,000 at every trade for a 5 minute risky chart? I don't know many people that are prepared to do that. There are a few very wealthy people that can do it, but I don't know many people that can do it. Bear in mind, the 4 hour chart makes your life a lot easier at the end of the day. So now you've been to the charts, you've seen the charts. While you're here, go and get your free gift. It's in the description. It's a Forex book. It's a PDF. It's free. I'm not asking you anything for it. And by the way, put a trade of the day out every single day. Every single day I put a trade of the day out. It's just trading ideas. It's not advice. It's there for you. Go and check it out. There's always a link. On top of which, I got the members area that you can join. And in the members area, you know what? Every day the traders get a video, and every day the guys get a list whether the market's going to go up, the market's going to go down, what's going to happen in the markets. My ideas. But from an old man to you guys, let's talk about why the 4-hour chart works better than most others. And it's as simple as this. Do you know they did research on the 5-minute time frame, on guys trading on the 5-minute time frame? And they took a bunch of traders that all had pretty much a similar qualification and a similar ability in the stock market, similar success rate. Let them all trade the 5-minute time frames and let's see what happens. 99% of traders lose trading the 5-minute time frames, no matter how good they are. And that is simple, and that is because of the psychology and the way you approach the market on a 5-minute frame and on a 4-hour frame and on a day frame is totally different. If you're trading on a 5-minute day time frame, you sitting there and you watching that chart, and any minute, every little move, every little second counts. Your heart's beating because you've probably traded too much. You're not trading within your means. It goes against you and you start making silly mistakes, really silly mistakes. You start jumping in and out of trades. You start revenge trading. You start over trading. And you know, one of the basic rules in the stock market is to wait for the trades to come to you and to not overtrade the market, to be patient. But you know, instant gratification is a massive thing in the markets these days. And what most people don't understand is that you're not trading against charts. You're not trading against a robot. You're trading against other human beings who believe they're going to be successful in the stock market, that their system is going to have the edge over your system, and you think you've got an edge, and you go into the market thinking that you can't lose, because nobody gets into the market with the idea that they're going to lose in the stock market, and you end up losing. Here's the thing, guys. With a 4-hour charts, you can take your trades with leisure. So you look at the day and you get your levels and you think, oh, there's my levels. Then you can put your business plan into action. Now you drop to the 4-hour chart and you can say, my stop loss on every single trade, $1,000. That's it. I'm not going to have a bigger stop loss than that. If I lose a trade, I lose $1,000. But every trade that I win, I'll win 2,000 and up. I'll win more on every single trade that I want to win. It's as simple as that, guys. That's your business plan. And obviously, when you're going to profit, you want to move your stop loss up and you want to add to the trade if you can, or if the trade looks like a winning trade. Now, your business plan's in action. Go to the 4-hour chart, you use the system, you see a trade, you put it in, you put your stop loss in at $1,000, you took your profit, you take profit in at 2,000 and up, and you know what? Go to the beach, go to the shops, go do what you want. Don't sit and watch the charts. You leave the 4-hour and you leave it on and you walk away and you go and do whatever you need to do. Every so often, you've got a phone, you've got an app, you've got everything you need. You can just check if it's going bad or if it's going good. And if it's going in your favor, you know you can go to your computer and you can just simply move your stop loss and put it into a break even, or put it up, or put it in a better place. And that's as easy as it gets. But here's the problem. The problem with trading is it's all about the psychology. It's all about the fear. Because when you start losing and you're watching the charts, you tend to move your stop loss away. You tend to lose more. You tend to try and hedge your bets. You try and double up on your trades so that it'll come back and it'll make you the money back, or it'll be a break even. And it never does that. It just gets worse and worse and worse. And everyone's got that threshold point where they just can't take it anymore and they have to get out of the trade. But you never do that with your wins. And that's what you should be doing with your wins. When it goes into profit, you should be going, oh, I'm in profit now. Let me move the stop loss up into break even. And it's going even into more profit. What a great trade this is. Let me double up on it because it looks like a really good trade. Looks like it's going to go to the moon. And you add even more to the winning trade. And it just keeps on going and it just gets bigger and bigger and bigger. That's what you should be doing. That's how you should be trading. You should be betting on the winning horse, not on the losing horse. If you've got a losing horse, dump it, leave it behind and run away. Let it go. Walk away. The sooner you walk away from your losing horse, the sooner it's behind you and you can concentrate on the winning horses, the ones that are bringing you the money in, the ones that are winning, the winning trades. Stop hanging on to those losing trades. Why are you hanging on to them? What are they going to do for you? They're just going to lose you more money at the end of the day. Now, 5-minute trading, they call it day trading, but it's a lot like scalping. And believe me, I've done it all. I've done it before. I've done the 15 minutes, the 5 minutes. But there are very few traders out there that can actually take a 5-minute chart, be successful with it. If you're one of them, that's fantastic. Really pleased for you. Bully for you, as they say. And I'm actually quite amazed, because most 5-minute traders will be successful for this period of time. They'll get overconfident. Next week they'll be gone. Blown account, overtrade, lose the stop loss, whatever the case. So you have to be patient. You have to be a good trader in the stock market. And it's all about taking the stress off, taking the levels of stress off. Yes, you're going to make money on a slower basis, but look at it this way. On a 5-minute chart, let's say you take a trade and you scalp it and you make $100. Okay, you made the $100, but the next trade you take, you scalp it and you lose $200. So effectively your win rate's meaningless. You got a 50-50 win rate, but you're $100 in loss. How does that work? How is that going to help you? Whereas with a 4-hour chart, you can place a $2,000 profit level with a $1,000 stop loss, walk away. It takes a day or so, but you make $2,000. I don't know many people that wouldn't be happy with $2,000 a day. I really don't. If you do, let me know. You don't get into the stock market and buy a Lamborghini like these guys are telling you. You know, so many guys out there are telling you that you can turn $1,000 into $1 billion overnight, and it just does not work like that, guys. Never will, never has, and it's not an instant gratification business. This is not a slot machine. This is a career. This is a way that you can make a living. This is a way that you can make money in the market, but it's not a slot machine. This is not something that you throw money in and it just throws money out at you. It doesn't work like that. You have to learn how to work with it. You have to learn how to get around with it psychologically, and you have to learn the game. And then you'll become successful at the end of the day. So guys, I hope that helped you in one way or another. Don't forget to come back for the next video over the weekend, where I'm going to show you what happened last week, what's happening next week. We'll go over the trades together and we'll discuss them. And then we've got the live videos during the week. Join me for the live shows. Those are quite exciting as well. Guys, don't forget to like, comment, and subscribe. Till next time, cheers, thanks, and bye.